I'm not a lawyer, but I knew what was at stake, namely, the fact that ties with the board were not being made clear. The truth about all of that has now come out, and now we're voting. I think the outcome is much worse than I thought it would be. That's $2,600 per share. Yes. Please help us with the math. How do we get there? What needs to take place for that to happen? The price goal is set for 5 years, as all of ours are. Tesla needs to work on building its self-driving cab platform, also known as robotaxis, which work in a way similar to SaaS. Instead of just selling a car and maybe some software, this turns into a way to make money over and over again. With Tesla getting a cut of every mile driven on the network of self-driving taxis, very high earnings, Tesla buyers can now feel better about the future. Several things will affect the price of Tesla's stock in the coming weeks. On June 30, production and shipping numbers will be made public. This is a major event. How important is this going to be, and what might this mean after the earnings report in the middle of July? Also, everyone is looking forward to the much-anticipated robotaxi show on August 8th. Today, we'll also talk about Cathie Wood of ARK Invest and her prediction that Tesla's stock could skyrocket to $2,600 by 2029, thanks to opportunities in the robo-taxi sector. Financial analyst Larry Goldberg is here to talk with us about these issues. Just before we start, please click the like button and remember to subscribe to Tesla Stock News. Let's start right now. A lot of people think that the recent vote has taken a big weight off of Tesla's stock, which, as Dan Ives points out, could make it worth $20 to $30 more. The stock has gone up a lot, and it's thought that this upward trend might continue. But there are still a lot of unknowns, especially about upcoming court decisions, which make it hard to predict where the stock will go in the future. The most recent data from May shows that sales have started to rise again in China. After a time of stagnation, this rise is notable, giving investors hope about Tesla's performance in one of its biggest markets. But it's important to keep things in perspective because these numbers only show a snapshot and don't always show a clear trend. When we look at Europe, things become more complicated. Sales are falling because Germany took away rewards for EVs, and there are other problems with the rules. The Model 3's planned tax changes, which will be in line with China's new tax, are likely to make it harder for Tesla to do well in the European market. How do you think the mixed signs from China and the problems in Europe will affect Tesla's stock in the short term? This question was asked by Larry Goldberg. Also, the way the market is right now means that Tesla's long-term prospects depend a lot on how well the company can handle these legal and market problems. Tesla is at a very important point right now, and how well it can adapt to these changes will likely have a big impact on its future. The European market has some unique problems, like regulatory hurdles that make it hard to sell electric vehicles. Even with these problems, there is some hope for recovery because new reports show that China's numbers from May went up. Even though the conversation briefly shifted from cars to robots and AI, production and delivery measures are still a big part of how much Tesla's stock is worth. Larry says he will always be committed to Tesla, not just because of how well the company is doing now, but also because of Elon Musk's innovative leadership and projects that look to the future. This long-term view is different from the short-term changes that happen quickly in response to both good and bad news. As the earnings report from Tesla gets closer, which is usually in the third week of July, there are a lot of hopes and worries about the company's financial health. This quarter, analysts think that profits will miss, but not by a large amount. Based on what we know now, profit may drop below $0.80 per share. This number shows a big drop, and it suggests that 2023 might be a year of reorganization, with a focus on long-term strategy changes rather than short-term profits. This expected drop in earnings is mostly because of how well Tesla did in key areas like China and Europe. Even though there are signs that sales are picking up again in China, the market is still hard to predict. The rise in sales in May is a good sign, but it's too early to say for sure that things will keep going up. Investors and analysts will be keeping a close eye on this turnaround over the next 3 months to see if it can last. Putting aside the immediate earnings report, Tesla's future seems to be closely linked to its upcoming events. especially the highly awaited robotaxi event on August 8th. People expect this event to give them a sneak peek at Tesla's next wave of technological advances, but it's still too early to tell how well this showcase does and how it affects stock prices. In the past, Tesla's stock has gone down when new technologies were seen as too far in the future or not instantly useful for making money. As a whole, ARK Invest's most recent report says that Tesla's stock could hit as high as $2,600 by 2029, mainly because of the growth potential of robotaxi services. This hopeful prediction depends on robotaxis being able to be used and expanded successfully in the next 2 years. ARG's analysis, which is known for using a lot of different simulations and probabilities, says that this goal has a 50% chance of being reached. Even more conservative predictions still put the stock much higher than it is now. At the same time, financial experts are paying close attention to ARK Invest's predictions because they are very optimistic about Tesla's future. ARK Invest thinks Tesla's stock could go as high as $2,600 per share by 2029, which is their bull case target. This estimate stands out, especially when compared to what other analysts think, who think the stock will only hit around $2,000 in the same amount of time. ARK is optimistic because they think that Tesla's robotaxi projects and the wider use of self-driving technology will be very successful. They say that these new ideas will change Tesla's business plan and make it much more profitable and bring in a lot more money. This positive prediction comes from a lot of complicated studies and models that look at how technology and markets will change over the next 10 years. But some critics and cautious experts doubt that such fast progress and market adoption is possible. They say that many technological, regulatory, and operational problems could slow down the rate of growth and adoption, which could lead to a lower valuation. The differences between these statements show the different levels of doubt and speculation about Tesla's ability to lead and profit from the revolution in self-driving cars. When looking at the robotaxi project, ARK's modeling shows that there is a 58% chance that Tesla will start its robotaxi service by 2025. Some people, though, think this chance is too big because there are still a lot of problems that need to be fixed before it can happen. A launch in 2026 is 38% likely, a launch in 2027 is only 4% likely, and there are almost no hopes for launches in 2028 or later. This timeline shows that experts and other important people have different ideas about how to smoothly and quickly roll out such a new technology. For example, the idea that Tesla would instantly make a robotaxi service available across the whole country is pushed back by more cautious predictions that say the first commercialization would probably happen in a more controlled, localized pilot setting. It is more in line with normal operational strategies to use advanced technologies in the real world with this method. People are arguing about what commercialization means and how big of a scale these services should be to be considered effective. Some people might hope for a nationwide rollout, but in reality, it would probably be more practical to start slowly in a few cities or areas. This way, any operational problems can be worked out before the rollout goes nationwide. While ARK is optimistic, other experts are more cautious. They think that the robotaxi service will be a big step forward, but the initial rollout may happen more slowly than ARK's model leads them to believe. If the odds were changed, they might say that it's more likely to happen in later years, like 2026 or 2027, because it will be harder and take longer to reach full operating capability. Tesla is still figuring out how to operate in the complicated worlds of self-driving cars and robots, but the predictions for its future are interesting and varied. Tasha Keeney from ARK Invest has given a new model that suggests self-driving cars could be one of the most important advances in AI, having a huge effect on Tesla's business and its shareholders by 2029. ARK's research suggests that robotaxi sales could make up 63% of Tesla's total sales, with 86% of that income coming from this segment. This segment is also expected to account for 88% of Tesla's expected $8.2 trillion enterprise value. The full breakdown of revenue also includes sales of electric vehicles, energy solutions, and insurance, but the robotaxi service is clearly the most important part. Some experts agree with this big-picture view. They think Tesla will make tens of millions of cars, mostly for the robo-taxi market, which could eventually replace traditional car ownership. However, people have different ideas.